Hello everybody, my name is Thor Young. I'm a moderator with Bear Bull Traders, and I'd like to do a recap for you today on my trades. In the course of my recap, I'm going to cover a pretty specific topic, and it's something I've been wanting to cover for a little while. And that topic is volume and price analysis and how I'm using it to help me trade. VPA, if you're trading without really using it, you're really kind of trading a little bit without all the information. And it's really interesting because it's the information that's the cheapest and most readily available information to have to you. But sometimes we get so obsessed with candlesticks and patterns and charts and stuff like that that we make things so complicated. We forget that there's very, very basic methods for determining whether or not a stock is going to go up or go down. And those methods have been around for a very long time, since more or less the inception of the market. So the main thing that I want to cover in this is at BBT, I'm actually going to be doing a full volume price analysis class. And I'll be doing that on June 24th. So for anyone who's interested in coming by and checking that out, I'd recommend it. And we're going to be covering all of this and a myriad of other topics that are going to go in there. Everything from, early tape reading history all the way through some of the current techniques that are being used. And one of the things I want to bridge, since we're getting into this, and I want to give you a little taste of what we're going to look at, is I want to talk to you about anomalies in the volume action. Now, when you're looking at price, as you can see up here on Play, I traded Play today. I also traded OXY and AAL. Had a great day on all of them. What you'll notice here on Play is that we were selling off very heavily in the morning, and then bounced here, and I actually took the bounce long. But why do I make the assumption we're going to have a higher move up rather than continue on down? And the volume is the key to what that is. So the concept is kind of like physics, if you will. Everything has a causal and an effect relationship. So a cause and an effect, right? When a stock price goes up or goes down, we expect there to be a reason for that, right? So what happens quite often is people get into a different mindset, and they actually think that it's easier for a price to fall than it is for it to go up. But that's actually not exactly the way it works. In this way, it's not like physics or gravity. It actually takes effort for the stock price to move in any direction, whether it's up or down. And you should expect to see the associated amount of volume with that effort. So if you have the price that's dropping very, very quickly, but there's not a lot of volume, that's not right. There's an anomaly there. Something's going on. Whether that's the insiders of the makers are trying to get the price down so they can get a little bit better of a fill, or maybe they're trying to push the price up so they can get out of a position a little bit more before it drops. Remember, there are players out there that see a much bigger picture than you do. They can see where people's stops are at in the market. They can see a lot more data that helps them. So we have to be aware of that, and the easiest way to spot them is with the volume. So on Play here, again as an example, notice Play as it's dropping, it does this bar here on very, very large volume, massive volume, but then it drops from here all the way to here on subsequently less volume. Okay, that is an anomaly. This price should not drop from here all the way to here on small volume. That really shouldn't happen. So once it found a bounce and it came back and it reclaimed the 200 SMA, I went long here with a loss of that candle, right? And because of that, I got a nice push up here, and I got partials all the way up to pre-market high. Again, why did I take this long? Because there was an issue with the volume in these candles, which showed that there wasn't a lot of support for the move going down. This selling move wasn't something that people were really overly interested in, right? So come back up here to OXY. OXY, I did a trade in as well. Wasn't a super profitable trade. I got stopped out pretty quick, but it was a good move. You can see here, we sold off very heavily into here, and then we had this hammer that was thrown on solid volume. So you have all of these moves happening that are all these larger size decent moves, and they're all on this around 322,000 shares per candle. And then you have this small candle that happens here and closes in a hammer, and it's a very tight candle, but it's on the same amount of volume. That's a little interesting. Like you would expect, since this candle has the same amount of volume, that it would move the same amount of distance. But it didn't, right? What happened is it sold down and then it actually bought up and closed in a hammer. So this is showing you an anomaly. We have a smaller candle on the same level of volume. We push up here, we come down, and then look what happens. The buying volume starts to come in better. So a nicer entry or a cleaner entry would have been somewhere right around 10, right, for this break up. Now, it wouldn't have been a huge move, but it certainly, got you in there. But you can see again, how the volume kind of led me into seeing why I didn't think this move was going to continue down, because when we had this smaller bar that bought up and closed in a hammer, we had a similar amount of volume. Now, if this volume had been a large spike, that most likely would have signified a much larger reversal. Think about it in that context. Generically, larger things, needs larger catalysts to happen. If you're getting a pullback, that normally happens on a smaller volume ratio, right? So last trade I did today, AAL, very similar situation to the other one. My trade on play. You can see here we sold off in this bar here with a massive amount of volume. Almost 2.9 million shares were exchanged in this small bar, and then it sold off here to the 100 moving average. And then what happened? But it did it on very small volume in comparison to the original candle. Right, came all the way down here, really small volume. And then we continued to have smaller resting volume while we were holding the 200 SMA and throwing indecision. And, an indecision, and you can consider that to be a hammer as well, potentially, but definitely indecision. So you come up here, your next candle, we have a buying candle that happens on slightly above average volume, right, which looks good, comes back down, holds the 100 moving average, and then I go long at the break of that candle's body, loss of the 200. Very tight risk versus reward, but since I've seen the sell-off happen on low volume, indecision on low volume, and now we've started buying and raising the price, and we're now on steadily increasing volume, that makes this move much better. And I got a great move on AAL all the way up to 1730 before it came back down, and I eventually tried an ad and stopped out. So I ended up holding for a while before I took that ad, but still stopped out. It bounced again. Look here. So another anomaly. We have a large buying bar, but it happens on a very narrow price range, right? This is something that should very much come out to you and make you think something is going to happen, because what we have is we have this effort to sell down, but then we hit here, and rather than selling off more, we actually bought a whole lot right in this narrow range, right at 1650. After that happened, we broke up on solid volume, confirming that we were having a move up, and then we consolidated down a bit. It bounced, closed in a hammer. I went long, got a few partials up before I got stopped out. Unfortunately, the market it has been in control of this one today and is still continuing to press down a little bit. So that's my little talk today on volume. I'm not going to go too much more into it because I want to save a bunch of juicy stuff for the class that I'm going to be doing soon. But when you're out there looking, what you need to be looking for are candles and patterns that are not in sync with the volume. If you're looking to hold, as long as you have good steady volume and it's ascending and pushing up, then you can hold. As soon as that volume stalls, those are your partial points, right? Those are the times to start looking for something that's going on because your volume has strained off. If your volume surges or your price surges, but it does it without volume, then that's also a very big anomaly, because why is this happening? Why is the price going up yet nobody is buying into this move, right? That's going to show you that it's more likely it could quite be a trap, right? Where the makers or the insiders are actually trying to sell off the remainder of their position, knowing very well that it's about to drop significantly, right? But their idea is to get out there, put some shares out there, get you to think the stock is strong, get you to go long in the strong stock, only to be trapped as they sell out of their positions and trap you into yours, right? And then they're going to buy it back from you at a lower price once you get out. So volume, volume, volume. Cheapest thing out there, and it will help you out tons. I hope this has been an informative video, and as always, keep it green.